Welcome to GP Bullhound's Tech Thoughts. Today's the 11th of March, and we are here with Inge Haydorn and Nela Salkovic for our weekly market roundup. In today's episode, they will give a market update and talk about software, social media, semis, and gaming. Over to them.
Let's start about the market then. And it's very, very interesting now that if you look at correlations, the correlations between Nasdaq and the 10-year US Treasury has been really, really high, but it's been broken down now in the last 6 weeks, which is quite interesting. Now the correlation is much, much stronger with EPS revisions, which is, I think, good news for us fundamental stock pickers. So that's really a good news in the terrible news around Ukraine and the war and the effects there. So let's talk a little bit about the effects. A lot of demand for news sites and so on, because everybody wants to keep updated with what's going on. On the negative side, you have already seen the prices on oil and so on, and that's affecting retail and consumer demand as people get less in the wallet. But on top of that, you also have the ad market getting weaker, and especially in Europe is clearly affected by this. And that's also affecting social media, which I'll come back to in a few minutes. So going out to software, on the cybersecurity side, we saw CrowdStrike reporting really strong numbers, good guidance. You saw Google buying Mediant, and that's really just another step from the mega caps buying more cybersecurity assets to implement in their portfolios of offerings. So we would expect that to continue going forward. So quite good news in general then on the cybersecurity side. Going out to more general on software, Oracle reported weak, so say earnings last night, but that's just due to their holdings of two holdings called Ampere and Oxford. Top line was bang in line with expectations. Cloud grew 24%, and the guidance for the next quarter is also in line with expectations, which means EPS will fall, but due to investments and taxes. So I would say Oracle quite so say in line with expectations. On the negative side, DocuSign continues to disappoint. Q4 was better than expected, but guidance going forward now for next year is that bookings will only grow 13%. So this is clearly a COVID hangover case. On top of that, you have the reorganization of the sales force, which is definitely affecting them this year also. So stock down 17% last night, and it's definitely going to be in a cold for a while. Going out social media, as stated earlier, the effects on the ad market is definitely there. And Facebook CFOs out stating that last night they're seeing effects from Russia, 1.5% of the sales, but they're also seeing softness across Europe. So not good news at all. And then you have the Criteo coming out saying that will be reaching the lower end of the guidance this quarter, so around 5% only instead of 7%. And top line growth affected by the war, weakness in France, more groceries shopping than apparel shopping and so on. So the same signs. We're definitely going to see some weakness here in Q1, Q2 in Europe ad spending on internet and social media. So that's the social media part. Going over to semis then. Semis, the shortness continues. You see it every single day. Things have to be closed down due to the fact they don't get deliveries. We got the February numbers now in from all the major Taiwanese players. UMC really strong. TSMC very strong, up 37%. So demand is definitely there. If you look at the Taiwanese numbers, I think the biggest problem still is supply. So we're going to see a very strong year this year. And we also listened to all the major vendors on the equipment side on this year's Morgan Stanley conference, and the same thing there. Demand is super strong. The problem they have is to supply all the equipment, and there's a lot of things now spilling over to 2023 as the order books are full and they're sold out for this year. So these guys are really enjoying a strong year this year, and as many expected a pause year next year without growth, but we continue to believe that we'll see quite healthy growth also next year, 2023, in these names. So The last one on the chip side, which is more general tech and chip, is the Rivian report from last night. Once again, missing numbers and cutting production targets a lot. Now down from 50,000 to 25,000, blaming the semi shortage, blaming the war, and so on the shortage. But that's a massive cut to the production numbers. And then the question always comes up: how many of the pre-orders will stay now, given the fact that half of them won't get the car, which was promised this year? So bad news for Rivian on the back of that. Then over to Naila and gaming.
Okay, so a quick gaming update then. So the world is coming out of COVID very quickly now in 2022, which is clearly affecting gaming negatively in short run. On top of there are a number of key titles like Battlefield and Call of Duty underperforming expectations. January numbers was relatively weak for the industry, and the initial number for February points in the same direction. PlayStation is still popular, but the sales numbers are in decline. Decline home console gaming in Japan is going down, and PC5 stock is very low. So it's a struggle to get, and people therefore move to Switch or mobile. So hardware sales is staying steady, but software sales isn't improving at all as far as physical goes. Console sales were also really down in February in UK. Switch was the best-selling platform, but was a third lower than last February. PC5 stock shortages continue to hurt, and gaming sales were down 14%. Going over to Nintendo, who are doing relatively well. Numbers are obviously down compared to last year. And looking at our own model, as of February 26th, their hardware sales are all at almost 3.1 million units, which is slightly a million below the 4 million that are left of the total estimation, 23 million units for the year. I believe they're in line with their expectations and that they're going to reach the 23 million by end of March. Thank you for today and see you next week.